Heading into this week, I found two particular sectors that I think are going to get rotation and that we should be on the lookout for. And there are levels that I'm looking for on SPY and QQQ that I am looking forward to buying the dip on. And we'll take a look at that shortly. So, team, I hope you had a great weekend. I hope every time we go over the weekend, I hope you do rest up, take your head off of the market, and really let your mind absorb everything that you have experienced and learned throughout the week, so that you can come in much more organized heading into the upcoming week. Also, keep in mind Fridays are very dangerous. You as a trader are going to get let's say sucked in. I'm going to use the term sucked in into trading the short-term expirations on Friday. And you may think that things are balanced out. However, when you do get comfortable, the market tends to just pull the rug on everybody on Fridays. And a lot happens. Whatever happens on Friday, I call it nonsensical day. And I don't usually trade on Fridays. If I do, usually it's about one trade that I look for in the most high probability scenario. And if that's not in there, then I wouldn't take that trade. Obviously, this Friday in particular was incredible. We went up 1.5%, absolutely magnificent. And we're going to talk about that. But I did just want to remind our traders and also warn others that are learning to avoid Fridays as much as possible. It's nonsensical. The reason why is because you got the futures contracts that are expiring on Fridays. You got the stock options. You got so much that is expiring. The ETFs, the indexes on Friday. And that creates a lot of for example, you have a large participant that pretty much rolls their positions out, closes one thing and then rolls their position out, but the way they do it affects the market short term. And if you are holding short term expirations, or if you're trading short term expirations on Fridays, you're going to suffer greatly because it is just so easy to get sucked in. So please always keep that in mind every Friday. It's not fair or justified for you to lose whatever you have made in the entire week just on Friday. If you keep yourself out on Friday, the way that you can find opportunity in that very bad day is by really waiting it out until the very last hour of the market. And once all of the nonsensical stuff has happened and we head into the last 45 minutes of the market, that's when we usually get the real motive of what the market, or the real move, and we figure out where the market is going to set up into for next week. So in that case, this is where we pick up contracts that are going to benefit heading into next. Now let's get back to the market, team. The way that the market closed on Friday, very, very interesting session. This massive supply bar, this big breakdown candle that we had on the S&P 500 was absolutely absorbed more than 50% on the way back up, which is a bullish indication. So the reversal is bullish. The volume is overshadowing the prior day's breakdown. And that's another good thing to notice for the bulls. The TTM squeeze reset, which means that the big sell pressure now has been squeezed. Basically, the squeeze has fired on the downside on the sell pressure, and that's off the table. So you got some sell pressure off, and now it's all up to the bulls. Now, the way that I'm going to particularly trade the S&P 500 is, if we pull back, I'm going to go to the 5-minute time frame for this particular chart. If we pull back, let's say heading into Monday and Tuesday session, let's say on Tuesday we get heading into Monday, we get a nice move towards maybe 597, and we end up selling off back down into Tuesday on tariff fears, and let's say we go down to 590 area. If we go down to 592 area, if we show strength there where the bulls are really holding that level, you can react to the demand candle within the 5-minute or the 15-minute time frame by what do I mean by demand candles? If you see a massive, let's say, bullish engulfing, obviously not in this case. This is in a downtrend, so that would be against you. That would be the counter move. But when you got these breakout moves right here, and I'll show you why this is going to be considered a breakout. When you got a breakout, anytime you get a bullish engulfing, it's going to behave as a continuation. So if we go back to the prior trend there, you can see whenever we get these bullish engulfing candles, it pretty much would mark a bottom, and we would see some really nice upside, as we can see there. And we would see it over and over in uptrending markets. So if we go back a little bit further down, let's go to the 15 or the 30-minute time frame so we can let's go to the hourly time frame so we can see longer. But yeah, my point is, whatever time frame you're looking at, if you are trading with the trend, when you get those nice bullish engulfing candles, it's going to greatly work in your favor. And the probabilities that it's going to continue within that reversal is going to be high. So let's go back to our chart here, to the current day. So the reason why we're going to buy the dip, or we're going to buy the reaction, not the dip, the reaction off of the 592, is because that is a level of support. So now what we need to see is bulls can go up on Monday towards, let's say, 596, 597. But once we do get that pullback, your buy opportunity, your reaction where you're going to react, is going to be at the 591 for the intraday. I trade SPY every day, and I make amazing profits. We are in the live trading room every day. We don't send out the alerts directly. We don't send out day trade alerts on the zero DTEs because they're very risky. But we do mention it in the live trading room in this channel here. So yeah, you can join during live market hours, and we'll be there. You'll hear our thoughts on what we feel and whether we enter a trade. But yeah, team, if we head down to this level and we find support at that level heading into Monday and Tuesday, this is where I'm going to buy the dip, heading towards 600. So the 600 for me is going to be the key level. Buying any dip on the S&P 500, I'm going to target the 600 level. So why do I say we're going to buy at the 592 to 590 area? This is because that was the structure, and this is where the bulls need to establish structure to place a higher low structure. If they do place that higher low, the chances that we go up on this inverse head and shoulders is going to be extremely high, especially considering that we get this downtrend breakout here. So this is what I mean. Even if we go down to 591, even down to 590, I would say that is still somewhat, but I wouldn't recommend holding positions below 590. So the level that you're going to cut all of your positions is, I would say, 590.45. At 590.45, you have the confirmation that the trend is weak, and you should not be part of that in case this does lead to a major downside towards 568, which is a much larger bull support right here at the 200 SMA line, where the buying will be much stronger. And one of our teammate Mariapon made another point. He said that if we do drop down to the 576 or the 568 big bull support level, the RSI is also going to be at the 30%, which will be a high probability trade opportunity to buy the S&P 500 long term. But considering that we did get a sizable candle on Friday, sizable reversal candle, we're going to trade with the momentum of this reversal here, given that the overall trend is up, as long as we stay above 591.77. That's a level that I'm going to trade very bullish if we do print. Let's say I'm watching the intraday 5-minute time frame, and we print, let's say, a bullish engulfing candle at this level, or let's say a bullish hammer followed by a massive demand candle reaction like this one. I'm going to trade it knowing that this time it's not going to react the way that it did over here in a downtrend, and that considering that we're outside of the downtrend, the trend would be much much stronger on the demand side with these massive green candles heading towards 600. So this is what I'm looking for on the S&P 500. Now let's go over QQQ. QQQ also is at a very key level on the daily time frame, as we can see here, right at the 500 psychological support. The RSI was trading at 30%, which is a major buy signal for large money institutions, algos that buy at the 30% in an uptrending market. So the way that we use the RSI is, the strategy is, if we're in an uptrending market, we buy the 30% rebound because that is a high probability. As we can see here, this was a 30% rebound at the 200 SMA line, and that led to a major rebound, really nice bull market. So that can be a nice reset. So we do have a bullish piercing reversal. We didn't get the more than the 50% extension back up, and more than 50% retracement, which is a little bit concerning. But I think heading into this week, bulls can step in and take it up towards 515. This is a level of support. So any reaction that we can get on the 5-minute time frame, that will be nice to absorb, to observe, to really trade the critical levels that we're trading at. So let me go ahead and draw this trend line so we can identify. We can draw it here. Let's see. What if we connect it here? Because we want to get the most data points possible. We'll do this. So this right here is our trend line here. And so far, and it is aligning with the 200 SMA line. So as long as we maintain above the 200 SMA line heading into Monday session, we can anticipate QQQ heading towards the next level of resistance at 519. So the first level of resistance that we can look forward to is 512 on Monday, with 519 being the pretty much, if the sentiment is not strong on the downside on tariff implementations on Tuesday, then we can anticipate that level being met. And we'll take a look at some stocks that are going to push those the QQQ. So these are the stocks that are we can see it. All right, we'll just go to the XLK sector. This is the technology sector within the S&P 500, and we can see it's getting a bullish candle right at this level of support, and this is a good level for a nice rebound, considering that we have been inside of this bullish channel for about for over 2 years now. So let's see how this goes. So far, bulls are reacting to that level of support. The volume is definitely there, and yeah, if bulls do get another, let's say they regain the 226 level heading into this heading into Monday, this is going to seem going to get more upside. Now, team, the particular sectors that I'm looking at for strength is XLF. So XLF, very interestingly, is showing a lot of fuel. It looks like bulls are still there, and I'm not exactly sure how the news we had over the weekend in regards to Trump adding crypto to the reserve. I'm not sure how that's going to affect the financials market, but so far this looks like we got a lot of fuel on, and these are the stocks that are within the financials. We got Berkshire, JPM, V, MasterCard, BAC, WFC, GS, and I looked at some stocks within XLF, and I have to say that Bank of America, this could be a great trade right on Monday's open, or you could even buy the dip. If let's say the market, if Bank of America opens and just really dumps hard, you could probably pick it up around, let's say 45.40 area, 45.15, even 45.50, and expect it to come back up and see some upside towards 48. So far, this is what we're seeing on Bank of America. I think financials, I'm not exactly sure how this is going to affect the financials market, but based off of Friday's close, we do have a really great setup on the financials, and the fuel is there. So Bank of America, WFC, here's another one regaining the 20 EMA line, and all of them have fired their squeezes to the downside. This means that the TTM squeeze has been reset. The bearish pressure has been off, and bulls are stepping in for that breathe out. So the way that I look at the TTM squeeze is, if we fire the squeeze to the downside and there's no more downside uh, to follow, this just means that bears pretty much had their, let's say, advance, and that was it. That was it. Bull stepped in, absorbed it, and now they're trying to move back up. This is what I'm seeing on WFC. Now, the other sector that I'm seeing a lot of strength on, team, is XLY. XLY is basically consumer discretionaries with Amazon, Tesla, HD, McDonald's, Burger King, TJX, Low, Starbucks, NKE, O'Reilly. So two stocks in particular that I'm watching are Tesla. We can see Tesla here is very, very oversold. It is sitting right at this, right at its 200 SMA line, very, very oversold from the 20 EMA line, overstretched. And whenever we overstretch from the 20 EMA line, we get a corrective wave back up. And yeah, so even if we get that corrective wave back up, just for that, this is still a good opportunity for the bulls to take advantage of heading into this upcoming week, expecting upside on Tesla. This is also the fourth retest of this uptrend, which means this right here was the third retest followed by the confirmation. So the fourth retest is usually about as high of a probability as the third retest. So Charles also mentioned that the RSI is at 30%. That's another great signal. This is the first time that the RSI really has pulled back to the 30% ever since that large melt up we had, ever since Elon Musk's involvement with Trump and Trump nomination and everything. But yeah, so far this is what Tesla is looking like. I did share my analysis on the weekly watch list for Tesla ahead of time. And yeah, it's looking really good. I'm not sure why this person, David, put a sad face on it, but uh, yeah, this right here is looking really promising on Tesla. And I did want to show you an example of the fourth retest to encourage any of you here that do want to sign up for our mentorship and join us Tuesdays and Thursdays. So this is an example of how to trade a rising support trend line. So a rising support trend line is basically an uptrend structure. You get a expansion, you get a contraction back down, another expansion, another contraction back down. And if you're in an uptrending market, anytime you retest the level, you're going to get another rebound back up. So the third one is, we can see the first one is the origin. The second one, this is where we start to track the trend line. So the way we do it is we connect our line from here, connecting that data point to that second one, and we extend it all the way up for the future prices to pull back down to and react to. So if we extend our line all the way up, and in the future the price action comes down here and creates that reaction there, we enter off of that bullish engulfing, that bullish demand, and we trade that breakout move higher for a higher high structure, knowing we're in an uptrending market and knowing that the structures are the upward movement is the primary trend. So if you see that, you would trade that, whether it be the intraday time frame, 5-minute, the daily time frame, the weekly, or the monthly time frame. And then let's say you're watching it again, you close out your positions around here, you secure profits at the higher high structure, and now we get another big swing back down towards the rising support trend line. This time bulls show some weakness, but at the end they prevail right around here. Once you have that double bottom on that bullish candle right there, or on that, you go long again, expecting another higher high, and you make you pretty much trade that fourth trend line as well. We have more materials on this one, even for the downside as well. And you can see this right here applied to the S&P 500 very well, from the recent from last week. And anytime we retested that trend line, we basically saw more downside and more downside. If you traded the S&P 500 at those levels, anytime you got a bearish engulfing candle, you probably did really well. So right there, you can see the breakdown. Head and shoulders led to some major downside. Head and shoulders, bearish engulfing led to major downside. Bearish engulfing led to major downside. Really nice opportunities on the downside. And once the trend finally changes and we enter an uptrend, you see that, but inverse, going up, where the green candles will be the bigger candles, while the red candles will be the smaller candles. But yeah, same concept. And once you get a breakout, as we can see there, we enter an uptrend, and now you have a bullish channel. You have a rising uptrend to buy the dip at. But yeah, that's SPY, that's QQQ analysis as well. We shared Tesla, so we expect Tesla to get a nice rebound to at least 330. And if they do show strength at 330, we could move all the way up to, honestly, all the way up to the 400s. So could be a good opportunity. Pay attention to Tesla at this level for some nice bullish trades on it. All right. We covered Tesla, and now let's go to PLTR. PLTR is another stock that I'm watching for a nice rebound here, for a counter trend rebound. Now, the reason why I'm liking this particular level, if you all remember, when we were trading up here, I sent out an announcement tagging everyone on our Discord to stay away from PLTR, HIMS, TEM, all of those stocks that had gone up 400% or something. And I said that if you buy it, you're going to FAFO, meaning F around and find out. And hopefully our teammates stayed out, took the warning, and now I'm telling you to buy PLTR here. So the reason why we are looking to buy here is because our risk is, our stop loss is going to be 78.50. The reason why this level is can see smart money entering is because this is where the prior breakout was. Turning this level that was once resistance into support is the nice reaction that we're getting. And if we draw our, for those of you that don't know how to draw the Fibonacci retracement, you basically, anytime you have a trend, you're looking at a trend for this one. Let's see if we can find it so I can I'll show you how to draw it, but for now, let's just do the analysis. So here's what we have. We draw it from the top to the bottom, and this gives us these percentages. Now, the two percentages in a corrective wave that sees more downside follow through is usually around 23 to 38%. There are some other extreme ones with 50%, but in this case, even if we target the 38% Fibonacci retracement at 96, that would still be some really good upside to catch on PLTR, whether you are trading shares or whether you're trading a call option on it. So we did get a little bit of volume there that absorbed the prior day selling. So I think this can be a good opportunity for those of you that like PLTR and that do want to trade this potential rebound from this stock. If you want to read my in-depth analysis on PLTR, you can find it in the weekly watch list. These are my levels here. And these are my targets. This is what I'm looking forward to heading into this upcoming week. And I hope you bank on it. Make sure you have your stop loss at 78.50 on your shares and your call options. And take advantage of that move towards 96. All right, so we are holding AES. AES is one of the stocks that we are holding. And for AES, I'm going to share my analysis on the weekly watch list as well, team. So Rest assured, you'll see this in the weekly watch list as well. So AES stock had a strong demand reaction to earnings and confirmed this breakout from the bullish falling wedge. So we were inside of this bullish falling wedge here, and a falling wedge is pretty much you got a widening, a very wide range of price action that tightens and narrows over time between two converging lines, two narrowing lines, and this is what we have so far. You see price action basically getting smaller, and then boom, you get a massive breakout, and that changes the trend back up, sends it back up like a volcano, and you get a nice rebound. So this right here is coming from forward guidance on the stock, getting positive earnings reaction. So that confirmed this breakout from the falling wedge. We also have a bullish divergence. As we can see, the relative strength index on the RSI is rising while the stock was falling. This tells us this bullish divergence is another signal for the bulls to take into account. So yeah, this makes it a very high probability trade, considering that we had strong positive reaction to earnings. We had this fake out here where the candle was breaking down, and then earnings reported otherwise, creating this bear trap, and this can send AES towards 12.59 and even 14 in the upcoming weeks here. So yeah, the volume was 5x the average. As we can see, the volume was, I mean, enormous, you guys. 71 million. That is the usual average volume on AES over the last 50 days is around 12 million. So yeah, a lot of volume, and I think this is going to get more upside. We are holding AES January 16, 2026, $10 call, currently at 2.50 premium. We alerted at 2.10, but it's still cheap to enter. For those of you that are not in, you can still pick it up on Monday. So AES is looking really good. I think this trade is going to print more. This trade is going to print more. We have plenty of time. It expires in January 16, 2026. That's over 9 months. And we're very close. I mean, we're in the money. We're buying something that's already in the money. So if the stock does move, we're going to get some nice premiums coming into our contract. All right. Another stock that I am looking forward to on the swing trade is KMI. KMI is also looking good. As we can see, volume is accumulating. We did break this downtrend here. We have regained the 20 EMA line. We have rebounded off of that key level support from 26.19. So I'm going to buy to open. This one got a nice demand, like I said, above the 20 EMA line. After retesting a key support level, I'm going to buy to open KMI January 16, 2026, 27 call at 2.75 premium. This contract is at the money and almost in the money. So the contract will print if the stock moves as we anticipate. The stop loss for this one is going to be at negative 30%. But yeah, team, keep that contract in mind. Buying to open KMI January 16, 2026, 27 call at 2.75 premium. Yeah, the contract is basically at the money, and it's about to go in the money, and it can print if we do get a nice demand candle follow through anytime this week. We have plenty of time to really play this trade out. Really nice high probability trade there. All right, so we have Disney as well here, team. I'm really liking Disney. Disney is showing strength above the 220 EMA line after a nice digestion here from two strong earnings, and so far we're looking like we're rebounding. Printed a bullish engulfing candle, moving on from that consolidation and the 20 EMA, and it looks like we're going to be heading for an expansion towards 115 next and then 118. The way that you can trade Disney is you can pick up a long-term contract, January 16, 2026. Give yourself plenty of time, sacrifice the strike price, because that will make your contract much more durable, opposed to buying the short-term expirations that are closer to the strike. So pick up the Disney January 16, 2026, 135 call at 5.0. I think that's a great swing trade to have a stop loss around 35% for a nice anywhere between 60 to 150% on this particular trade once we do get that breakout above 118. Plenty of time to cover as well. All right, so team, I did talk about XLF, and despite my bias or despite my fear, I still do want to mention one stock within the financials market because as we can see, rotation is really looking to head into or maintain into the financials, and we have a TTM squeeze reset with very strong volume at a key level resistance that has already gotten several tests there. And it looks like we may get a big breakout heading into Monday and Tuesday. So, yeah, you can take advantage of the financial sector by trading either JPM, WFC, or BHC on Monday's open, whether you buy the dip or you trade the strong strength into Monday's open. But yeah, the opportunity is there for JPM. And if the stock does sell off, the dip buyers can show up on the financials for Monday and Tuesday. MSTR, let's take a look at MSTR, Gulam. So MSTR here, I'm honestly, I'm very bullish on MSTR. Same concept. We got the reset at the 200 SMA line. Team, I just want to say, please make sure you are, let me make sure that I did share it. I hope I did. Okay, looks like I didn't share it. But make sure you always check out our weekly watch list analysis. I'm going to be much more consistent with it. So MSTR here, same concept. We were in an uptrending market. As we can see, once we got close to the 200 SMA line, we saw a major expansion on MSTR. And now here we are again. I was telling our team back in November, and I want to show you, team, like I'm not, let's just, I want to show you guys that I was telling our team up there when we were up there. Sorry, didn't mean to MS. Okay, so it's going to be my name, and then we're going to type MSTR. And the reason why I want to show you this is because let's see. We were talking about MSTR okay, there we go. So you can see back in November 20, we were warning our team, MSTR is up so much. I honestly would not chase that far up here. Give it time. They will sell off and be cheap again to buy when the premiums return to normalcy. That was November 20th, team, November 20th. And if you look at MSTR on November 21st, that was the day that we peaked. And at the time, you can see we were talking about DXCM. DXCM has actually been doing really good, and it's just looking, it's been in this nice channel. But yeah, team, MSTR, you can see our narrative at the time was to stay away from MSTR. Hopefully nobody chases. This is November 21st. Hopefully nobody chases MSTR at these levels. Market will provide again. And look at November 21st. This was when MSTR was at 540. Matter of fact, it had already gapped up and it was trading at 590 at the time, if I'm not mistaken. So here we are again. I shared MSTR with our team now at $250. This is where we just picked up MSTR, and this is where I'm recommending our team buy MSTR, expecting some really nice returns because everything they make, they put into buying Bitcoin, and they hold so many Bitcoins. I think it's in like the 460,000, if I'm not mistaken, 460,000 Bitcoins. So it's in the billions and billions. But yeah, this is MSTR here, and it's at the 200 SMA line, 30%. The TTM squeeze is very, very oversold. Looks like it's really flushed the sellers out over and over. And I think the chances we see more upside is very high. Matter of fact, it's already up trading at 297 in after hours. So if you did buy those shares with us on Thursday at 249, we're currently up. We're up $50 a share. So really, really nice. And I think it's going to continue to rise. There's a lot of room to the upside for MSTR. We're going to head all the way up towards 343 to retest this downtrend line here. And we're going to assess from there if the strength is overwhelming enough on the demand side for the bulls to break there. Sorry about that, team. But yeah, that's my chart on MSTR here. I see there are some questions here, team. BRKB is up 15% year to date, and SPY is down 3%. XLF's major holding is BRK. Yes, sir. Yes, sir. And well deserved with Berkshire, with with Warren Buffett. How? Let's see. Oh, thank you for the reminder, Mohammed. Team, I do want to say that I'm noticing. So I was going through the sectors, and like I said, there were 2 to 3 sectors that I really saw strength coming into. But I do want to share some thoughts in the back of my head for those of you that are investors. That is also. Anyways, let's talk about it. So some sectors that I think is going to see major upside in the years to come. One of them is XLRE. Keep your eyes out on XLRE because I think investors are about to witness that the real estate market is going to be strong for a long time, especially with private equity getting involved here. So keep your eyes out. Keep your eyes out on XLRE for the next 4 years. I think this sector is going to greatly outperform the S&P 500 sectors. And these are the stocks within the real estate: PLD, AMT, Equinix. There's more. We'll talk about it more. Another sector I think that's going to greatly dominate under Trump's administration is XLE. So XLE is the energy sector, and the stocks that are in XLE are XOM, CVX, which is so ExxonMobil, Chevron, COP, EOG, WMB, OKE, SLB, PSX, KMI, MPC, BKR, Velo, Halliburton. So a lot of these stocks are these energy stocks have been consolidating over the last 4 years here, and this bullish ascending formation, which I'll show you here in a second, what this anatomy here is, or what it looks like. Give me one moment, team. All right, here we go. We're at the triangles. There we go. So these are the triangles here, and we can see the bullish ascending formation. Once we do break out above the level of resistance, we get major expansion. Let's take a look at more thorough example on this. This is a thorough example, and take a look at that, team. Take a look at that. Tell me that's not a print right off the book there on XLE. Tell me that's not a print right off of that example we have on example 1. So whenever you see these, whenever you come across these, I want you to go through our mentorship materials and just take a look at all the different examples and see if it fits or if it aligns with your with the time frame that you identified it on. But yeah, this is what we have so far, and I think once we do break 93 on the energy sector, this is going to explode over the next 2 to 3 years. But yeah, keep that in mind. Keep that in mind, team. I'm really excited for this week. There are a lot of opportunities. We got a big drop over the last 2 weeks, and finally we got a nice reversal that we can trade. We got some nice clear levels we can assess, and I'm really excited to trade. So yeah, I'll be in the live trading room almost every single day of this week. And I'm really looking forward to seeing you there as well. If you are an intraday like FaZe and I, Easy and Bahar Trade and Kasha, more of our traders. Thank you so much, team. Take care.